Hello, this is Patrick. Welcome to Chart Built Wealth, Profitable Investing with Technical Analysis. Well, I wanted to update you on the bearish call on the S&P 500. So far, it's been pretty timely. And I also wanted to cover the long holdings that I currently have, the recommendations that I have out there. Only one change, Tencent Holdings, a Chinese internet conglomerate, was stopped out. Again, that happens during bear markets and it pays to get out of these positions. Although I'm not totally done with Tencent Holdings, I'm going to be watching it closely. So let's get into it. Okay, let's just briefly look at the S&P 500. So went bearish a couple of days ago, and we've gotten a big down day on Friday. And we have a potential head and shoulders top here. I've seen some market technicians already calling this neckline being broken. They have a straighter neckline, but I think that is not the right way to draw a trend line. It has to connect the lows wherever your trend line is, and that's what I'm looking at. So anyway, if we were to have a daily close significantly below 5,800, that would target 5,500 on the downside. However, there may be a pause coming. We have a bearish rainbow convergence happening. And what that suggests is that prices will stop going down until the moving type 1 convergences, until the moving averages come down and test the price. So that would take, it'd be a several day pause, or a type 2 convergence where prices come back to that convergence and then fails, and then that promises a new low. If it's able to break through, then we take off the bearish call at that point. I would probably be moving my stop down with another down day or two. But I don't think this down move is over. This would, nothing goes in a straight line. This would just be a snapback, kind of a rally. You can see we're not even close to being oversold yet, even on a daily chart. And if we look at seasonality, again, which is just a tendency, it suggests we got, oh, I don't know, maybe another week of downward prices on seasonality before we get a bounce. So anyway, I wouldn't be jumping on the short side at this point in time. I would gradually sell shorts, gradually sell some of your bearish positions as prices move down, just as we do when prices move up, we sell a little bit. So that's the S&P 500. Still bearish. Looks like we got more downside, but it may not be in a straight line. So here's Tencent Holdings. We were stopped out. I raised my stop from 45 to 50, and we got stopped out clearly. This is a big pattern with big potential, but that was a pretty bad week on big volume. So where do I expect this to end? And if I see some sort of reversal pattern, I'll consider getting back into this, but I'm not, it's a possibility. We still have a bullish trend line in place for Tencent Holdings. And this is, again, a Chinese internet conglomerate. And, the downside price projection on the point and figure chart is 44, which would test the bullish trend line. And if we go back, 44 would bring us down just about to my original stop. So I'm not giving up on this. Same with Mattel, which we were stopped out of. I'm still watching that. But, and especially when you think that prices for the overall market are going to continue to go down, you want to make sure you follow your discipline on these things. So while we're on a Chinese internet conglomerate, let's take a look at FXI, the iShares China Large Cap ETF. We had a slight break. Our stop was 29. We're at 28.65. So not much of a break there. I'm not ready to jump out of this yet. I would not be surprised to see a little bit more downside momentum. So I would sell if we get much more. But again, just like 10-cent holdings and like Mattel, I'd be watching these for reversal patterns. We have a clear five-wave advance, and now we have an A, B, and we're in a C wave. They're usually cut off somewhere in this area, the fourth wave of the prior advance. I know that's a lot to think about, but anyway, I'm holding this, hoping to get, let's see what the futures are saying. Futures for the Shanghai index, and this does not always track exactly right because it's a ETF traded in the United States. Shanghai opened pretty flat, so not seeing a lot of downside at this point in time, but um, I'm not going to let this go down much more. If it's down tomorrow, I'd probably sell a good amount of what I'm currently holding. And um, I had a point and figure chart, which isn't here, but it's still going to have a bullish trend line. I'm expecting prices to come down to the 26, 27 level, and I'm not going to hold it till then because you don't know for sure. And so down day tomorrow, and I'm going to sell most of my FXI. Still made money in it though on that big upside spike. Okay, copper. Last few weeks ago said, I wouldn't be aggressively buying because I expected a test of this support line of the ascending triangle. And then last week I was saying we really need a weekly close. Uh, Actually, on Thursday I said, we need a strong Friday where we close above this confluence of moving averages, or we'd have a bearish rainbow convergence similar to the S&P 500. But we were able to break through on Friday. So this is a good positive development for copper. So eventually I'll probably move my stop up around 25, but I'm going to leave it where it is right now. And on a daily basis, I expect a couple more updates here because you can see we're going to form a bullish rainbow convergence on the daily chart, which is a shorter term chart, but it works the same way. So if we got a couple more updates, that would bring this convergence to fruition. And when that happened, I would probably sell some of my copper short term. If I had 100 shares, I'd sell 20 of them. And if we got a pullback to the convergence and it was able to hold, I'd buy those back and probably buy more. So that is copper. And this is a big picture of copper. So this is the triangle breakout and here's the retest. But this pattern is in the back of my mind. And if prices are eventually able to get up above 475, this thing could go to $8. So this would be a huge, huge move. The point and figure chart on copper is also bullish with a bullish trend line in place. So copper looks good. Here was platinum. It has a similar pattern. It was not able to break above the confluence of moving averages on Friday. It's a slight disappointment, but we bought again at 82, 82.5, and we're gonna see this through. So not quite as bullish on platinum at this point as copper, but still going in the right direction. EXCELON, the utility company, a big 2-year bullish descending triangle with a descending resistance line and a flat support line. Now this resistance line is support, and prices are trying to get through this confluence of moving averages, and everything looks fine. I don't see anything super negative here at this point. And this is something I would be adding to. Your reward to risk is really good. Our stop is at 36, and our potential upside is 51, which is a long way away. And our point and figure chart is also confirming that with a $49 price projection. Microsoft was really soft on Friday. It's just barely hanging on to our stop there at 425. Oh, I'm sorry, I should have changed this. We lowered the stop on Thursday to 415. This is a bellwether. You know, if this breaks and doesn't hold 415, then and we have a bearish convergence. So this happened just the way it was. This is a type 2 convergence. Prices came back to the convergence, failed to get through, and so it promises a new low. So if that happens, it'll probably break the bullish trend line on the point and figure chart. It'll break the pattern here, and that would tell me that the market's in a whole lot of trouble. Here's the point and figure chart, and you can see that about a 415 or so would break this blue bullish trend line and would put things in jeopardy. Oh, I'm sorry. This is the FXI point and figure chart. I'm really sorry for this. It's out of order, but you can see that prices could still come down to about the $26 level before it breaks its bullish trend line. So that's why I thought there might be some more downside in the China large cap. Here's a suggestion if you got a lot of cash because you're getting stopped out of things. Buy T-bill. It's an ETF. It pays a little bit higher than a 5% uh, dividend. It pays a twelfth of that monthly. So every month you get a nice income stream and with no risk or very little risk. And so this is somewhere to put your cash. Also, when you're getting a 5% money market rate, that tells you that something is very strange out there. For a risk-free investment, getting 5% with no risk, you know, for you retirees and people that have a lot of cash that don't know what to do with it. But it also flashes a caution sign to me that something isn't right. Thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. Please like and subscribe. I may be coming out with another buy recommendation on another commodity. Um, and you'll be the first to know if you like and subscribe. Have a great evening.